Hey everyone, and welcome back to the channel. In today's video, we will be talking about ETFs, or exchange traded funds. ETFs are great for beginner investors. ETFs are great for intermediate investors. ETFs are great for seasoned investors. No matter where you're at in your investing journey, ETFs are essential in building long-term wealth. As a quick refresher, think of an ETF as a basket of stocks. Some baskets are larger than others, whereas some baskets are more focused, or maybe they have less stock positions. You can have an ETF that focuses on a certain industry or market cap size or a type of stock, etc. The list goes on. There are thousands of ETFs in the market today, and some of them, in fact, are the same. They're just offered by different brokerages. For example, you have Vanguard, iShares, Fidelity, Schwab. All of these companies actually offer an S&P 500 ETF as one example. And all of those ETFs are exactly the same. So even though there are thousands of ETFs, some are going to be the same, but many of them are going to be very different as well. I work with investors of all types, but one of the most common questions that I get as a wealth coach is, Mark, how do I start building my portfolio? And my answer for that is similar to many things in life. It is always essential to build from the ground up and start with a firm foundation. It is no different when it comes to your portfolio. You want to have a firm foundation to lean on, especially when times get rough. If you have seen my dividend portfolio, you will have noticed that I have a strong presence of ETFs. And in fact, the two largest positions I have are ETFs. And if you haven't checked out my dividend portfolio, I will put a link right here for you to check that out later. All right, now that we have gone through a little refresher of what an ETF is, let's jump into the video. Welcome back everyone for another video. For those of you new to the channel, my name is Mark Rusin. I am a CPA and not a financial advisor, so please perform your due diligence before investing in any stock or ETF mentioned today, as everything mentioned in this video is for educational and informational purposes only. And also, if you are new to investing or looking to open a new account with a different brokerage, check out M1 Finance. I'll put a link down in the description down below where they are giving away $50 free for just opening and funding a new account. This is a great way to jumpstart your investing journey, or maybe add to the journey you're already on. Just bring over your current assets to M1 Finance, open a new account, and get $50 free just for doing that. All right, now let's take a look at 3 of the best Vanguard ETFs to consider adding to your portfolio today and forever. Vanguard is a well-known brokerage name around the world. Some of their ETFs are world-renowned, and one of the reasons they are is because they offer some great low-cost options. And we are going to look at those individually for the 3 ETFs that we are going to discuss today. All right, let's dive in to the 3 top Vanguard ETFs to consider for your portfolio. The first top Vanguard ETF should come as no surprise. It is the Vanguard S&P 500 ETF, stock ticker VOO. As you probably guessed, this ETF tracks the S&P 500 index and is really a must-have option in my opinion. Owning this ETF means you own a piece of some of the largest companies, not only in the US, but really in the world. For you to lose all of your investment means that some of the top companies here in the US will have to have gone bankrupt. And if that's the case, we're going to have much deeper issues. Before we get too far, another ETF to consider in this position is VTI, the Vanguard Total Market US ETF, which tracks every single US public company on the market today. Talk about diversification right there. But I really see so much overlap in those top 500. VTI owns 2,000 positions, and obviously the S&P 500 ETF, VOO, owns around 500. But you're going to be so top heavy because they are market cap weighted index that I see so much overlap that I think it's really one or the other. I know plenty of people that want to invest in VOO and VTI. That is completely fine. But for me personally, there's so much overlap there that I prefer going with the top 500 companies. So looking here, you can see the chart for VOO, and over the past year, the ETF is up nearly 15%. And as I mentioned from the start, Vanguard offers some great low-cost ETFs. It's one of the things they're known for. And VOO is no different. It has an expense ratio of 0.03%. This is the fee that is taken from your investment from Vanguard for running this ETF for you. This ETF also pays a dividend based on its underlying positions, and currently the yield is 1.33%. The assets under management equate to $262.82 billion. Next, let's take a look at the top sectors for VOO. Again, you are investing in the top 500 companies here in the US, so as you can imagine, you're going to have some great diversification. The top sector hails from the technology industry, which equates for almost 30% of the entire ETF, followed by financials at 15.85%, consumer services, healthcare, and industrials wrap up the top 5 largest sectors in this ETF. Now let's move over to the top 10 holdings. As you will see, Apple, which is the largest company here in the US, is the largest holding at 6.92% weighting, followed by Microsoft, Amazon, Alphabet, formerly known as Google, Tesla, Nvidia, Berkshire Hathaway, and Meta Platforms, formerly Facebook, and rounded up with United Health Group. The second top Vanguard ETF to consider for your portfolio is the Vanguard Dividend Appreciation ETF, stock ticker VIG. If you have been following me for a while now, you know that I love dividend stocks. I love the passive income, but going even further, I love dividend growth stocks. And that's exactly what this ETF here invests in. Dividends are one of the best forms of passive income, and dividend growth stocks can speed up the wealth building process much quicker. Let me explain in very simple terms. Let's say you own 100 shares of Company A. The company pays you a dividend, and that amount can buy back, let's say, 3 more shares of Company A. So now you own 103 shares of the company. Now you not only have more shares, but during that next year, the company increases the dividend 15%. So not only do you have more shares than you did the previous year, you're also getting paid more on a per share basis than you were the previous year. So now you get a higher dividend income. And again, you're able to add 3 to 4 more shares the next year. So now you have, say, 107 shares. And the company yet again increases the dividend another 10 to 15%. And you can see how the snowball gets rolling and it speeds up faster and faster. And really, you added no more income. You didn't take any more money from your bank to invest in Company A. It was all financed through dividends. And this is what's great about dividend growth stocks. With that being said, VIG does not focus on a particular industry. In fact, it focuses on a type of stock, a dividend growth stock. Let's take a look at the chart. Over the past year, shares of VIG have increased 12%. The ETF has a very low expense ratio of 0.06%, and it has a dividend yield of 1.77%. So although you have a low yield, you're going to be expecting higher dividend growth with this ETF. Assets under management equate to $63.36 billion. Next, let's take a look at the industry breakdown. Financials is the largest sector in this ETF, followed by industrials, the technology sector, consumer defensive, and healthcare rounds out the top 5 sectors. In terms of the top 10 holdings, Microsoft holds the top spot with a 4.68% weighting, followed by United Health Group, Johnson & Johnson, Procter & Gamble, JP Morgan Chase, Visa, Home Depot, Coca-Cola, Broadcom, and Costco. These top 10 holdings equate to 30.88% of the entire ETF. So if you're looking at your portfolio and you love dividend stocks, and as I was explaining, you love the idea of dividend appreciation, companies that are consistently increasing their dividend each and every year, then maybe take a closer look at VIG, because this is exactly why it was built and the main focus of its positions: companies that grow dividends. The third top Vanguard ETF is the Vanguard Information Technology ETF, stock ticker VGT. This is a very popular technology ETF, and it can be viewed as a rival to the very popular QQQ technology ETF. Now, they have a lot of similarities, but there are some unique structural differences between the two, so make sure you take a closer look to see what fits your portfolio needs. There is no question that technology has come a long way over the past 10 years. And there's also no question that technology is going to continue to grow, to make jobs better, to make processes more efficient, and to make our lives easier, hopefully. VGT was built to track the performance of the MSCI US Investable Market Index. This is one of the things that makes investing in ETFs so amazing. You could be looking at your portfolio and say you want some more exposure to technology, or as we just mentioned, you want more exposure to dividend appreciating stocks, companies that grow their dividends. Well, you can have both of those, but if you are focused on technology, then let's say you don't want you're a risk averse person, you don't want the individual stock exposure. Because if you invest in a company like Apple, you are dependent on the earnings of that one company. Let's say you do like Apple, but you also like Microsoft and you also like Nvidia too, and you don't have a ton to invest, or you don't want to invest in all three. Well, that's where ETF investing comes in. You can really like Apple and invest in VGT, and Apple's going to be the largest holding in that ETF. Microsoft's actually going to be your second largest holding. And you're going to get Nvidia. You're going to get all three with one investment in an ETF. And with that being said, those are three of the top Vanguard ETFs to consider for your portfolio. Again, ETF investing is a great way to build a strong foundation as it diversifies your portfolio from the get-go. You don't have to worry about the individual stock risk, as you have a very diversified portfolio within an ETF position. If you're looking for mid-cap stocks, or say you're looking for just growth stocks or growth exposure, or maybe it's real estate with REITs, they have ETFs for each of these different types or these industry focuses. So definitely check out Vanguard's long list of ETF options. And with that being said, if you enjoyed the content, please give us a big thumbs up, as it helps this channel out tremendously. And if you haven't done so, please consider subscribing down below so you'll be notified anytime we drop a new video. Again, thanks for watching, and we will see you in the next video. Take care.